Hey traders, in this lesson I'm going to be breaking down the source code to a script I made quite a few years ago called my dynamic structure indicator. And this script attempts to detect support and resistance zones in price action automatically. Now this is a stripped down version of my original dynamic structure indicator. If I throw the original indicator on and hide this one, the main difference between these two scripts is that my original one detects 2 support and 2 resistance zones. So it draws the current support and resistance and the previous support and resistance. So there's 2 sets of zones drawing at any given time, whereas the indicator I'm going to show you today only shows 1 zone at a time, just to keep things a bit more simple so that I can demonstrate this concept without overcomplicating it. If you're interested in the more advanced version of this script, the source code and a lesson explaining the code is in my indicators and strategies course. But for now, let's open up the source code and get started breaking down this script. So before we get into the code, let me just explain the user inputs. So we have 3 user inputs here to work with. The first one is ATR movement required. If I hover over the tooltip here, it says this is the minimum ATR distance price must move to consider a pivot zone to be quote unquote major or significant. So if you watch my moves and pivots lesson, or my auto Fibonacci tool breakdown, this is a similar concept to the deviation in those scripts. So we need price to deviate a significant distance from a pivot point before we can consider it a valid zone. So for this script, I just use a simple ATR deviation. So once the script detects a swing high, if we get a 1 ATR move to the downside, then this swing high is considered to be a significant swing high. If we do not get that large move after the swing high is created or the swing low is created, then the zone is ignored. This is to prevent the script from detecting minor swing highs in consolidation. That's the main purpose of that setting. It's set to 1 by default, but you can tweak this if you want. So I could set this to a really high number like 4, and now only very major moves will be considered valid. Now the higher you set that number, the more there will be a delay between actually drawing the zone and detecting the swing high. But I find that 1 works pretty good, 2 probably works just as well. Next up, we have our high-low lookback. So this is the lookback period for detecting the swing highs and lows in price action. Set to 25 by default, so we're looking back 25 bars to find the highest high and the lowest low over those 25 bars by default. And then finally, we have our max zone size compared to the ATR. And this tooltip says, if a zone is larger than the current ATR multiplied by this number, then it is considered too large and ignored. So this prevents things like, if I drop over to Euro Swiss franc, I know this market has a very large crash in the past. If I zoom right out, here we go. So if for whatever reason, this candle here got detected as a support or resistance zone by the script, this setting here will make sure that it gets invalidated. If the distance from the low of the zone to the high of the zone is greater than 2.5 times the current ATR, the zone is ignored because it's too big to be tradable. If we have a zone that is much bigger than like this, then when price action gets back up into that zone, it's really hard to trade any setups that occur in that zone, because ideally the whole point of structure-based trading is to have a safe, quote-unquote safe stop loss above that resistance zone, expecting that resistance zone to hold and push the market lower. If the zone is too large, then if you get a setup in the lower part of the zone, you're going to have a massive stop loss. And so I opted to ignore any zones that are much larger than 2.5 times ATR, just to keep the charts a bit tidier, a bit cleaner. Now, as you can see, the script is not perfect. It does a decent job of detecting major swing highs and lows, but during a trending market especially, the script really struggles to detect valid support and resistance. It does a decent job, like this right here, I would consider a valid resistance zone, and once price closes below that zone, I would expect any retests of that zone to potentially act as resistance and push the market even lower. As we all know, the old adage in trading, previous support often turns to resistance in a trending market. Even this zone here, it's a little bit ugly, but technically it is a valid zone because we had these large wicks here, a bit of a push out of that zone. And then once price got below it, we came back up to retest it. It did in fact act as resistance and push this market lower. But anyway, This is not a trading lesson, this is a coding lesson. So let's get back over to gold. Is a good example of how this script detects nice major resistance and support zones. So I'm going to stick on this chart for today's lesson. And let's move on past our user inputs. So first I get the current ATR value, which is used for validating significant moves and invalidating support and resistance zones that are too large. Then I get the highest body and the lowest body. So the support zone and resistance zone is drawn from the wick, the low of the wick, to the lowest body of that swing low. That is how I personally identify objectively and in a rules-based manner a support and resistance zone to trade within. And it works pretty effectively. As you can see here, we had a nice push out of that zone on a lower time frame. This could definitely have been tradable, this retest of support. And with resistance, again, this was a nice zone that was definitely tradable. And in fact, I did trade this. I took profit on a gold trade that I took a few weeks ago up in this zone. And this indicator did a great job of highlighting that resistance zone. And it did so by detecting the high of the bar and the highest body of the bar to draw our zone between. So that's what these two variables here are used for. We just use a basic ternary operator here to check if the open is higher than the close. And depending on what we're trying to get, we assign the relevant candle price to this variable. Then moving on, we have our persistent variables, which are used for tracking our resistance and support zones. So we have res1, res2, and sup1, sup2, short for resistance and support. 1 is the wick price. So for resistance, that would be this price here. And 2 is the body. So that would be this price here. And for support, it's the same deal. Sup1 is the wick. Sup2 is the body. Then we have two persistent Boolean values here. We have two persistent Booleans. Look for new resistance. So if this is true, the script begins looking for a new resistance swing high to validate. And look for new support does the same for support. So these are just flag Booleans that tell the script what it should be doing right now. If we have a valid support or resistance zone that hasn't been violated yet, these are set to false and the script ignores any new zones that are detected. Moving on, we then have our ATR variable and our potential new support and resistance zones. So we save the ATR value when a new support or resistance zone is detected. We do that so that we can check how far price has moved from that zone without taking the current ATR into account, because we want to know what the ATR was at the time that this support or resistance zone was created. And then if price moves a far enough distance out of that zone, we want to start drawing our zone. And if we take current volatility into account when doing that, then it's kind of going against what we're trying to do here. So these variables here are used for saving a potential support and resistance zone. And then once that zone gets validated, like right here, we had at least one ATR move from the low. And then on this bar, we started drawing our zone. The script would have saved this low and this body, these two values here, in potential S1 and potential S2. And then once we had that significant move, our actual sub1 and sub2 would have been overwritten with these two saved potential support zone variables. Moving on, here is where we detect our fractal swing highs. So let me go to this swing high here to explain this code. So what we're looking for here is this pattern here. So we want a lower high, and then a higher high, and then a lower high. So if these are candles, imagine that these are candles and not terrible, terrible childish drawings. This is the pattern we're looking for. And that's what we have here. We have a lower high, a higher high, and then a lower high. That gives us our fractal swing high, and that is what this if statement is looking for. So on this bar right here, this if statement is checking, is the previous high the highest high over our look back period? And is the current bar's high lower than that previous high? And are we looking for a new resistance zone? If these conditions are met, then we create two new variables within the scope of this if statement, R1 and R2. R1 is set to the wick of our swing high. R2 is set to the highest body. And this little stacked ternary condition here is checking all of these three candles to see which candle has the highest body. And that is what is used to draw our zone between. And if the distance in pips between our R1, our wick, and our highest body, if this distance here divided by the ATR, the current ATR, is less than or equal to our maximum zone size, then we save our potential R1. So we stop looking for a new resistance zone and start focusing on validating the current detected zone. We save our wick, we save our highest body, and we save the current ATR. Then next we do exactly the same thing for support, except that we're obviously looking in the opposite direction. So swing low here. It's exactly the same pattern, but we're looking for this kind of pattern. A higher low, a lower low, and then a higher low. That gives us our swing low fractal pattern. Every swing low will look like this. Maybe some will have an equal wick. This wick might be equal to this previous low, to this low here. But every swing low and every swing high will look like that. So it'll have a higher low, a lower low, and then a higher low, and then price, if it's a valid support or a valid rally point, price will move higher. And so that's what we look for here. Exactly the same code, copy and pasted from our resistance zone, but all of our operators are flipped around and we're looking for the lowest body instead of the highest body and so on. So then moving on, here we check if our potential resistance zone has already been violated. If it has, then we reset our potential R1 and R2. So if the current bar's closing price is greater than our potential R1, so when this swing high was detected, if we had gotten a candle close on this bar here that was higher than that swing high or the next bar, then we would have reset our potential R1 and R2 to NA, and the script would just begin looking for a swing high again. Same for potential swing lows. If we detect a potential swing low or support zone, and then it's violated by a close below the wick of that support zone, and the bar state is confirmed, so we definitely closed below. We don't want the real-time close to violate this support one. We need a close below to be confirmed in order to invalidate or violate our current support zone. So if any of that happens, then our potential zones get reset and we just start the whole process again, looking for the next swing low or swing high. However, if this doesn't happen and we don't violate our potential support or resistance, then these two blocks of code here, check if we've had a significant decline in the case of a resistance level. Have we had a significant decline since detecting the swing high? If so, set the new resistance zone and draw it. So if the potential R1, which is our wick, if we subtract the current bar's low from that wick, and that distance from the wick to the bar low is greater than or equal to the ATR at the time that this high was made, multiplied by our ATR movement, which is this variable here, so 1 ATR by default. If we've had a 1 ATR distance from the swing high down to the swing low of this bar, if that has happened, then we have a valid resistance zone and we start drawing it on the next bar. So we override our resistance 1 variable and resistance 2 variable with our saved potential R1 and R2, and we reset our potential R1 and R2 to NA, and then the script will just keep drawing this until it gets violated by a close above. If that happens, then the script will begin searching for a new potential R1 and R2. Same for the swing low. We check if we've had a significant move from the low. So we subtract the potential S1, the wick, from the current bar's high. If the distance between those two price values is greater than our minimum ATR movement, we start drawing our support zone on the next bar. So that's what these two blocks of code do here. And then next up, we have some code here that I don't actually use in this version of the script, so I can delete this. I use this in the other version of the script, the main public version. And this basically just tracks how many times support and resistance zones were updated. And eventually, if the update count, so we've got 1, 2, 3, 4, 5, 6, 7 zone updates here, while this zone here was still drawing, I could use that update counter to, let's say, after 5, 1, 2, 3, 4, 5 updates, I could override, I could force this lower zone down here, which has not been tested for a long time. On that 5th update, I could stop drawing that and reset it, start looking for a new support zone. But I don't actually do that in this simplified version of this script, so I'll remove that code so we don't confuse ourselves. And I'll cover these last two if statements here. So this first one says, if the previous resistance high has been violated by a close above, then begin searching for a new resistance zone. So if the current bar's closing price is greater than or equal to that wick of our resistance zone and the bar state is confirmed, then we set look for new resistance to true and look for new support to true. So whenever one of our support or resistance zones gets violated, the script begins searching for a new support and resistance zone. So that's what these two Boolean checks here do. One checks for a violation of resistance, one checks for a violation of support, and we're looking at sup1 and res1 here, which is the wicks of those zones. So we need to see a close below the wick in order to consider the zone violated. So if this high had poked out of the zone a little bit, that wouldn't matter. The zone would continue drawing. We need a close outside of these zones in order to consider them violated. And then finally, we draw our zones. So first we draw our resistance zone. So R1 is set to a plot. And here we check, is res1 equal to res1 on the previous bar? If so, we plot res1's price. Otherwise, that means we just had a new zone update and we want to plot NA. If we don't do this, then we'll be joining our lines between each zone. So I'll show you what I mean here. If I backspace this check and save the code, now you can see the zones are being connected with our plots. So we want to break up our plots whenever a new resistance zone is detected. We want to plot NA on that bar so that we can break up our zones and have a gap between them. And then finally, we fill using the fill function. We pass in our two plots. So our R1, our wick price as a plot, and our R2 as a plot. We fill between those two plots and we just check, is the current bar close above res1? If so, we want to fill the color as green. Otherwise, we want to fill the zone as red. So as you can see here, whenever a zone gets violated, the resistance zone kind of turns into a support zone. So it turns to green to let you know that there is the potential that this zone may now act as support. And same for support. Whenever support gets violated, as you can see here, the support zone turns red to let you know that this zone may act as resistance now. So that's what this color check does on these two fill functions. And that's it. The final thing we do here is check some alert conditions. So here we have alert resistance and alert support. So these two Booleans check if we are having a test of one of these zones. So for example, alert resistance, if I had set my alert up here and selected my dynamic structure script and selected resistance alert, this alert would trigger if the current bar's high is greater than the lower part of our zone. So sup2 in this case, or res2, sorry, res2 is the highest body. If the current bar's wick pierces that highest body, that means we are having a price action test of the zone and it would trigger an alert based on that condition. Same for support. If the current bar's low is less than or equal to the upper zone of our support zone, then it will fire an alert. And if we have a breakout, so a close above our resistance zone, our res1, which is the wick, if we get a close above that price, then we trigger a breakout alert. That's what BO stands for. And same for support. So if we get a close below the wick of our low, then if we've set up that alert up here, so support breakout, that would trigger an alert if the current bar closes below support. And then we just have a bunch of alert conditions here that combine these Boolean variables into actual alerts. And that's it for this script. It's actually quite simple. It could definitely be improved. And in my other version of the script, I have slightly improved this by tracking multiple zones at once. But for now, I'll wrap this lesson up here. The source code will be below if you want to play around with this. There's a lot you could do with this. For example, down here, after we check our zone violation and all of that, you could check for candlestick patterns that unfold within this zone. So you could look for hammer candles that have tested this zone. You could look for double bottoms, that sort of thing, bullish engulfing candles. So here we have a hammer candle followed by a bullish engulfing candle, and then price rallied significantly out of this zone. You could get a bit creative with this script and add some extra price action detection code if you were so inclined. For me personally, I just left this as a simple automatic support resistance detector and added some basic alert functionality to it. I personally prefer to trade support and resistance manually using discretion. I still have rules that govern what I can and can't consider a support or resistance zone to be valid. One great example of this is that I only trade support and resistance zones that are either very major. So in this case here, this is a zone that I would consider to be major. Or in this case here, a zone that is tested as support and resistance multiple times. So if a zone has been tested as resistance and then broken above and then tested as support, when price comes back down to that zone, I would also take trading opportunities within that sort of area. This script doesn't track retests of zones historically speaking, but that is something you could try to implement into the script, perhaps using arrays if you're feeling adventurous. But for now, I'll wrap this lesson up here. The source code will be below, and I hope you have fun playing around with it. As always, best of luck with your trading and coding, and I will speak with you very soon in the next lesson.